Welcome to Decentralized News, our weekly coverage of Bitcoin, cryptocurrencies, Defi, and the macro news that affects it. Welcome in. This is Peter DeVries, joined by my co-host Ozzy. How you doing today, Ozzy?
I'm doing great. How about
Awesome.
yourself?
Beautiful. Yeah. Happy Father's Day to everyone, and to everyone that is wearing New Balance shoes and stacking sats for their children. I commend you. Let's get into it, though. This is not financial advice. Please do your own research, but we're going to start with our lead story. BlackRock. BlackRock had an S1 filing. It is applied for a Bitcoin trust that is widely being described as a spot ETF. Did you see this story?
Yeah, it's hard not to see this story. We've been talking about it on crypto Twitter for the last 5 days since kind of Thursday, Friday.
So it's just a filing. So there's a lot of back and forth. Is this good? Is this bad? Is it an ETF? Is it not? Because of the trust. But it appears to be accurate that it will function like an ETF. It is officially a Bitcoin trust, but similar to the gold shares, New York Stock Exchange GLD, which is a gold trust and launched back in 2004. So it's similar to that in terms of comparison. And we have a chart. I don't know if you've seen it, but in 2004, since 2004, when this ETF was created, gold has done well. And gold is people love to compare Bitcoin to gold, store of value asset. Big difference being Bitcoin has a limited supply, unlike gold, but it seemed to serve gold fairly well, having a spot ETF. The S1 filing does list it as a trust, but new units will be made or destroyed daily, and they will be purchasing real Bitcoin, not futures. So it does seem like it will function like a spot ETF, different from the Grayscale GBTC product in that there will be minimal premium or discount and much lower fees. I don't know. What do you think? Think this is a big deal?
I think it's a big deal for a lot of reasons in terms of international and mass adoption. I think it's major. Anyone who was too afraid or didn't want to learn or couldn't learn how to use an exchange and buy Bitcoin, now they've got easy access to buying Bitcoin and putting it in their Roth IRA, their 401k, even if they just want to invest 5% of their portfolio, like a lot of financial advisors have been saying lately. If you are interested, maybe invest 5% and throw it in your 401k or Roth IRA.
That's a good point, because if you can get it in your Roth IRA, you're not paying taxes on it. If you can hold off till retirement, you buy in early. And looking at that gold chart, gold was flat for 20 years. The ETF kicks off, and it's been pretty much up and to the right since, although not crazy, but up and to the right.
Yeah. So it's an interesting opportunity. It's good to hear that it won't be trading at a premium or discount, or at least not a major one, because that's how we got some of the issues with Three Arrows Capital and the UST peg with Luna through arbitrage that was being done from the GBTC trust and regular Bitcoin. So that's important. I think the other really interesting thing with this trust, why people are calling it a spot ETF, is that it can be redeemed 1-for-1 for Bitcoin, for real Bitcoin. And so that is something that's next level. You can't redeem GBTC for BTC. And so that's a difference that makes BlackRock's offering maybe a little bit more interesting than what's going on at Grayscale.
Oh, I definitely think they're going to be competing with Grayscale. It almost makes you wonder why you would ever even buy Grayscale at this point. But I give a lot of credit to, I don't know if you've heard of him, Matthew Crater. He does Coin University. He's got a YouTube channel, but I thought he broke it down pretty good. And why this is potentially a big deal. It's not all pros. There are cons, but just talking about some of the pros, BlackRock is the largest asset manager. They have 8-9 trillion in assets. Is it right? Trillion?
Yeah.
Is that the right?
Yeah, it's 8 trillion.
I mean, it's a huge number. It's hard to even say. So they have about 9 trillion in assets under management. They don't mess around. They don't apply for ETFs that get declined. And they have a record of 575 wins, 1 loss. Only one ETF that they've applied for that didn't go through. So the odds of this going through are pretty high. And you're talking about some pretty significant inflows of capital, probably in the tens of billions of dollars. And in terms of the gold ETF, like in 2004, when that one, they got 1 billion assets within the first 3 trading days. So just to let you know what kind of impact the launching of an ETF can have. So when gold, the ETF launched in 2004, within 3 days, $1 billion went into the market.
Which is nuts considering with the market cap of crypto as a whole is it's under $1 trillion right now. So Bitcoin, I think Bitcoin makes up over 50% of that.
Plenty of reason to get excited about it. And then the other thing that he talked about was it's a sign that Bitcoin will not be banned in the United States. It's like a huge normie stamp of approval, gives institutions an option to get exposure to Bitcoin beyond the low-key MicroStrategy investment that they were doing, that some banks were doing, things like that, buying MicroStrategy as a way to get exposure to Bitcoin. And then for retail investors too, the financial advisor is not going to lose his job recommending BlackRock products. Just the fact that BlackRock is involved, they're applying for an ETF, it does signify that, okay, Bitcoin's probably going to be around. They're not going to make it illegal in the United States. Big vote of confidence. And then the other interesting angle brought up that I saw was about BlackRock and how they're really positioning themselves as an ESG investor. So it may really smother out the environmental FUD against Bitcoin mining. So I thought that was an interesting angle about it. So if BlackRock's going to endorse it and they're positioning themselves as environmental investors in this coming wave of ESG investing that seems to be on the horizon, that's a big vote of approval for Bitcoin. So,
yeah, I think there's one major drawback. And it's that they're not letting you buy directly into Bitcoin. They've got to make it a spot ETF. They got to make it a trust. If you think about Fidelity, who was probably the biggest competitor for BlackRock in terms of assets under management in the US, why can't they just allow their investors to buy Bitcoin directly? And you're running into issues with, it's not actually your keys, so it's not really your coins. You're running into that issue as well.
I think for the old school Bitcoiners, I'm not going to give any money to BlackRock to buy my Bitcoin. That's maybe not true in the sense a 401k or Roth IRA. Sorry, I may want to put some in there just because it'll be tax free. Actually, I take that back. I may want to do a little bit of that. But in terms of bringing in new investors, yeah, that's true. But it does get BlackRock's hands on a lot of Bitcoin, and that I can understand. Yeah, that is a con.
Yeah. It could give them almost a monopoly on some Bitcoin if we think about it, just because we're already seeing diminishing amounts of crypto and Bitcoin on exchange. They just start swallowing it up. What's going to happen to access to Bitcoin?
Maybe we'll have more competition and more people trying to get in the game, and that can only be good for the Bitcoin price, right?
Yeah, it's good for the Bitcoin price, but maybe
In
makes
terms of
access.
the decentralized nature of Bitcoin and it being like a freedom money kind of takes away that narrative a little bit.
It becomes just another asset. So
Yeah.
it does take away some of that decentralization that we all crave and think is important, at least if you're invested in the space.
Estimates are a decision will be made in 45 to 240 days. So basically in time for the next halving. And we are already seeing Bitcoin dominance rally. Altcoins have been getting socked in the teeth, kicked in the shins lately. But Bitcoin dominance has really been rallying off its kind of lows of around 40%, and the hash rate continuing to just knock out all-time highs. It's interesting to see Bitcoin shine in the depths of these bear markets.
Yeah, it's great.
A gleam of hope.
I think the timing is super interesting. I think the fact that we're seeing timing lining up with the halving is potentially a very strategic move by BlackRock to buy in maybe just before a big rocket in the price. So
Yeah,
Would love to.
and maybe some more downside before maybe they're really positioning themselves well, because our next big story was Tether depegged, and that was really sent some jitters throughout the crypto markets. Late Wednesday, early Thursday morning, a little bit of a Tether depeg. That was a little scary. Where you had, I don't know if you had your finger on the pulse that morning a little bit, but that was a little spooky.
I know that some people were getting a little bit worried, but the DPEG was fractions of a cent. We're talking 0.996 rather than $1 flat, which it is the biggest stablecoin, which is concerning. But considering that USDC DPEG to not just below 96 cents not even that long ago, we're really not.
And it's not even its
not a big
biggest
deal.
the biggest depeg for Tether. It's had bigger issues in the past beyond this one. I think now it's just the fact that it's the elephant in the room as far as stablecoins is a little spooky. But the question is, why did this happen? And late Wednesday, early Thursday morning, Tether had a depeg scare. As there was basically some new information that came out. So as part of Tether's settlement with the New York Attorney General back in 2021, the company was mandated to report its reserves every 2 quarters. And it did finish those 2 years. This obligation concluded on June 15th. Now, the New York Attorney General released the documents on June 15th under a Freedom of Information request made by CoinDesk and I think maybe Bloomberg after Tether dropped. And Tether was opposing it, but it dropped its opposition to the request. The document included letters, bank accounts, reserve holdings, wallet addresses, as well as the methods employed by Tether to detect money laundering. They also detail the state of its assets as of March 31st, 2021. And what it revealed and what was reported by Bloomberg was that the company held Chinese paper, Chinese securities, as part of its reserves backing for the stablecoin USDT at that time. And it was held securities issued by major Chinese state-owned entities, including the Industrial and Commercial Bank of China, Construction Bank Corp, and Agricultural Bank of China, so exposure to Chinese banks. Tether did confirm the exposure to the Chinese commercial paper backing its USDT, but also said it steadily reduced its overall exposure to 0 since then and no longer holds any Chinese securities, although we don't know that for 100% anyway. But they did release an official blog post if you want to dig into it a little further, and they have since recovered their peg, but I'll post that in the show notes if you want to read more about their direct response to this kind of story.
Yeah, they held Chinese paper. There was issues with Chinese paper not that long ago, but the fact is they've removed that. We had big scare about American and US government bonds and debt not that long ago, even sooner than we've had concerns about Chinese debt. So I think it's a bit of an overreaction, and the fact that it depegged by not even a cent shows that really it was just FUD that Bloomberg was trying to stir up, and probably goes along the lines of trying to generate some of that media needed for the US digital dollar and pushing the banning on stablecoins.
Well, that's an interesting point you bring up, because when I think of the U.S., I think of the Federal Reserve. Do you think they want anyone else making dollars, any kind of stable coin? And now you have Tether, who is every other stable coin is losing market share compared to Tether, and they're just becoming the big fish, almost like what Binance was with Decentralized Exchange. It was like the last one left after FTX, and they became a big target. And you have FTX rumored in the background trying to get out of charges and probably very willing to throw CZ and whatever information he has, throw him under the bus. But anyway, that's all speculation. But they did drop charges against him recently, quietly, some of them. But yeah, Tether is got a big target on its back as far as the US is concerned.
Oh, absolutely. It's probably, I would say, the last major target, other than maybe Ethereum, that the US government hasn't gone after that would really disrupt the space if they targeted.
Yeah, and if they go after Tether, it's like a backhanded way of going after Ethereum without stable coins, it's hard to support all these DeFi projects, which support Ethereum with all the gas fees and everything. So it'd be interesting to see how this plays out. I wouldn't be
Absolutely.
surprised. And then when you have these depegging type of FUDs, sometimes the story does continue. It's like a little shaky, but we'll see. Definitely be watching Tether as the year goes on. I certainly wouldn't be surprised if they see more issues moving forward, especially now that they're the biggest boy in the room.
Yeah, I think the target for stablecoins is just growing and growing. I think they're the last major frontier in terms of what the US and who the US needs to target in order to roll out
But the point you bring
their
up about
digital dollar, really.
the digital dollar and the CBDCs is interesting because if Tether was falling apart and at the same time they introduced CBDCs, maybe a lot of these DeFi and smart contract platforms like Ethereum would be much more willing to get on board just to save their own lives.
Oh, absolutely. DeFi would almost have to get on
Go
board with
along
the
with
digital dollar if they didn't have
Hmm.
if USDT and stablecoins were outlawed. Their only other ability would be potentially move to a non-US dollar pegged stablecoin, and that would have a whole other sphere of implications because it would depend on which country, because we're already seeing Hong Kong also talk about regulating stable coins by 2024. So where would you peg it to the euro? I feel like the European Union's just as likely to regulate stable coins, or do we go based on the BRICS dollar or the yuan? And all of those would have other implications that I think are pretty major for the crypto industry.
Yeah, as of now, like anything besides US dollar backed stablecoins are minuscule. But yeah, maybe that changes if there's so much regulatory attacks coming from the United States. But yeah,
Frax is the only kind of major algorithmic almost stablecoin, although it's not quite algorithmic, that exists where it backs not by US paper, but it backs itself through through Bitcoin, Ethereum, USDC, and USDC.E and USDT. So technically, it does back itself with US paper if you consider USDC and USDT, but it's definitely a little bit more of a different approach. We're seeing Olympus DAO also trying to back itself and create this decentralized stablecoin. So that's your other option if you're looking for a non-centralized stablecoin.
speaking of other options, I mean, there is a story comparing Hong Kong and the U.S. How they're trying to regulate stablecoins. So, Hong Kong regulators were actively seeking to making a crypto hub and started stablecoin discussions back in 2022. They have completed the public consultation phase, and the Hong Kong Monetary Authority will focus on issuance, government, and stabilization now. And they also rejected algorithmic stablecoins, so maybe Frax, and are requiring stablecoin issuers back up their value with underlying reserve assets at all times. And compared to the United States Financial Service Committee, they introduced 3 draft stablecoin bills in 2023, with the latest proposing key powers to the Federal Reserve and also some capacity for state authorities to intervene. With these actions by U.S. regulators that many see as forcing established businesses to move out of the country, like stablecoin issuers. So, for example, the U.S. Securities and Exchange Commission has accused several stablecoin issuers of violating securities laws, even taking actions against issuers of Binance USD Paxos, which is a story we've covered a little bit. A little bit brought up what you were talking about in terms of an algorithmic stablecoin. So Hong Kong saying, no, it's got to have reserve assets, and then also just the U.S. giving power to the Fed and state authorities and pushing a lot of these stablecoins offshores.
Yeah, it's stablecoins are that last messy frontier, I'd say. So
We
interesting
need
to
regulation.
see. Yeah, they're that that last leg of regulation after this clampdown on centralized exchanges, and maybe coins as securities. So we'll see.
Yeah, stable coins, and then what is a security? What is a commodity? All that. Yeah,
Yeah, NFTs. I think
right.
NFTs are gonna
Even
be
the final frontier.
yeah, exactly. But let's get into a little bit of the macro. The
Sure, yeah.
macros was pretty major last week. We had CPI, PPI, and then the FOMC meeting. So all major events that were kind of,
I was a little surprised by how the market reacted to it, but yeah, go right ahead.
yeah, they were all defining moments. But I think FOMC was probably what impacted the market the most, with not necessarily the decision, but the speech
Mm.
that Jerome Powell gave afterwards. CPI kind of came in right on expectations. So both in terms of core and just general CPI on the month-to-month numbers and the year-over-year numbers. Some say that the core CPI number came in a bit above expectation. It depends how you rounded. And then PPI actually beat expectations, at least in terms of overall, but there's no real expectations in terms of what core PPI or PPI year over year were. They all came in at a nice lower level than the last month. So generally an improvement, but that same day, Jerome Powell and the FOMC made a decision not to raise rates, which, if you've been watching the show or been following the news on the FOMC and interest rates, would have expected that to be a very positive and welcomed decision. But it wasn't. And we saw the market actually tank after this meeting because
I was really surprised by that. One, because they seem to have fuel with the CPI numbers. Most of the takes I saw were that it was pretty positive, inflation's coming down. So they had that kind of narrative going. And then they did what they were expected to do, which usually is settling for the markets. They stopped raising rates. It was the beginning of them stopping raising rates, which is another positive. But go ahead. It was all based on the comments, apparently.
yeah, what Jerome Powell said during his speech in the question period afterwards took away any wind in the market sails in terms of thinking, oh, this could be the end. Jerome Powell indicated that more interest rates were likely. So we were going to raise at least another quarter basis point based off of projections from the committee. The terminal rate right now seems to be aiming towards at least one more quarter basis point hike, but we could see more. That's only what's been priced in now. And that the committee expects to hold these rates for at least a couple years. So we've talked about it, and I know I've mentioned it several times on our show, that the market was pricing in rate cuts by as early as November or December of this year. That's no longer the case. And Jerome Powell said what he'd been saying between the lines very clearly to the market during this last speech, and told them, we're holding rates for 2 years, for at least a couple years. Market still doesn't fully believe them, but they've at least priced out not having any rate cuts this year. They're assuming May of next year that we're going to start seeing rate cuts. So we're really seeing the market adjust to these new expectations, but not really fully believing what Jerome Powell's saying.
Yeah. No, it's true. It was pretty shocking. I did not expect his press conference to have such a strong reaction from the market, and one, that people believe what he's saying, but that he would come out so forcefully. More hikes likely. That surprised me. And no decrease for years. Also surprising. But they also said inflation was transitory. So you do have to take them with a grain of salt.
His speeches have been the bigger factor in the last several FOMC meetings.
Yeah.
The
It seems
decision
like the predictions have been correct in terms of what they're going to do. It's more about the speech. Yeah, I agree with you.
and what the speech is indicating in terms of future trends. And yeah, he was very blatant. And I think it's because he tried being soft on the market up until now and just saying what he said very clearly in less words and tucked between the lines. And he just gave up that approach because it really seemed like the market wasn't getting the message. And so he's really had to go a little bit forceful because some numbers in the core CPI especially were still stickier than what everyone was liking, and housing and rent are some things that they want to see maybe calm down amongst other things.
I know people are looking for a pivot from the Fed in order to end this bear market, but there are some other signs that maybe the bear market is coming to a close. We have some news out of Voyager and Celsius way back in the beginning of this bear market, but Voyager is going to allow withdrawals actually starting tomorrow or the day or today. We'll post this on June 20th. So in the court filing, Voyager plan administrator Paul Haig wrote that the platform will reopen to enable withdrawals from June 20th through July 5th. So there's a window of opportunity. So as of Thursday of last week, I believe, you can fill out a form and initial withdrawal amount. So if you fill out the form, it'll open a 30-day window to withdraw their assets. So you do have to go fill out a form. And it should take 3 to 7 days, they're saying. But you can only take out 35% of your assets. Good news, bad news, but still some movement there.
Yeah, at least you're getting some of it back. It's not nearly what you lost, but it's something. It's better than what you can say with FTX right now.
Yeah, and maybe there'll be other windows, and they're just doing it in a piecemeal approach. But yeah, we'll see. But either way, there
beats the length of time that people have waited for Mt. Gox.
Yeah, fair enough. But there is a window, so just be aware of it. You have till July 5th, and you do have to fill out a form. So yeah, it's all available. So if you have any money out there, you might want to take a look at it. We also have some news from Celsius. Did you see this?
I almost laughed myself off my seat when I first saw this news.
The defunct crypto lender Celsius has decided to sell all of the customers' altcoins under its new reorganization plan. As per an announcement, Celsius Network will be selling all altcoin, excluding custody and withhold account holdings. I don't know 100% what that means. From July 1st, 2023. But anyway, it mentioned that the amount recovered from the sale will be converted into Bitcoin and Ethereum. So they're selling alts for Bitcoin and Ethereum. And then I was just looking at what they held. So they hold mostly Celsius token. That's their biggest holding. But they also have, and it's 70 million worth, but they also have about 50 million in Matic, 25 million in ADA, and they've been getting killed recently ever since the SEC filing. So this doesn't give you, it's not a vote of confidence for those two. And then 17 million in Link, and then in increasingly smaller amounts, we have Litecoin, Polkadot, Aave, Bitcoin Cash, Binance, Uniswap, Solana, a few others.
Yeah. Matic and ADA are looking to take a beating again after not getting much rest. Link has been all right. It hasn't been hammered nearly as poorly as the other two altcoins, and then you've got BNB and mainly majors, but it's gonna be impactful a lot more than you think. It'll be interesting to see if it's all sold in one go or if it'll be slowly sold off over time. But just to think that you're not allowed to claim your old stablecoin, your altcoins, is interesting, especially considering the ones that they're talking about are mostly majors. It's not like this stablecoin has disappeared or anything. So quite interesting.
Uniswap, Aave, Litecoin. Yeah, there's a lot of big names in there. Polkadot.
Yeah,
Absolutely.
They're all stablecoins that people are assuming will survive the bear market.
Yeah, fair enough. Speaking of surviving, Binance has been also getting it on the chin recently, but there was an update with them. On June 17th, United States District Court Judge Amy Berman Jackson approved an agreement between Binance and the United States Securities and Exchange Commission dismissing a previous temporary restraining order that would freeze all Binance.US assets. And this is on the heels of Binance got sued by the SEC. They had other headlines that they announced they're leaving the Dutch market. They're under investigation in France. Nigeria version of the SEC declared them illegal. All kinds of stuff going on with Binance. But the SEC had also put I think it was a temporary restraining order to freeze all their assets. So they were able to come to some negotiation. So there's some movement of funds.
Yeah, it's for at least for Binance, it does give them a slightly more beneficial scenario in terms of they might not be totally locked up and maybe have more funds to fight any oncoming fight the lawsuit against them from the SEC. Who knows what else will also be why else they maybe want those funds liquid, but that's a big thing. And it is a major win because it was one of the biggest differences between the case against Binance.us and Coinbase. So very interesting.
Let's see. Speaking of Coinbase, so the SEC asked for more time to respond to Coinbase call for crypto clarity. So on June 6th, the United States Court of Appeals ordered the U.S. Securities and Exchange Commission to clarify its position on rulemaking petition from the cryptocurrency exchange Coinbase. So they sued, and the United States security regulator, and then they were told this judge said, okay, you got to answer within 7 days or 10 days, something like that. This was back on June 6th, so not that long ago. And then the SEC came back and said, what was their quote? We have not decided what action to take on that petition in whole or in part, and the writ has no merit, and they asked for more time, basically. What was it, like 120 days?
Another 120 days to make some decisions on the mandamus and rulemaking around crypto.
So the court said you have to do it, and they're just like,
give us another 120 days.
Yeah, we haven't decided.
Even though it's literally gone after Coinbase for breaking quote-unquote rules.
Yeah, that was like the same day, like on the 13th when they applied for like more time, they also sued Coinbase.
It's absolutely ridiculous.
Yeah, and so like the Coinbase lawyer, he was frustrated. They refused to commit to any deadlines despite the court's explicit order. I thought that was probably the most powerful quote from him. They were obviously not pleased.
No, I think his first point is also very strong, that they continue to repeat the fallacy that they haven't made any decisions on new crypto rules when we've been seeing enforcement actions from the SEC for the last several weeks now.
It'll be interesting to see what this judge says to the SEC. I would be surprised if they don't give them more time, but will they give them the 120 days or somewhere in between? Do you have any thoughts on that?
I've got a feeling they'll get the 120 days, but I'm interested to see if maybe the judge will be on our side and essentially ask the SEC to respond faster. I know that Coinbase has been responding very quickly to any decision that's been made by the judge. They got back to answer the judge only 10 days or less than 10 days when they had over 2 weeks to respond. And they've essentially call the SEC's non-answer very evasive and actively harming the industry. They're asking for staff recommendations in 60 days. And they're also pointing out, I guess, some of the language that the SEC used is regarding decentralized exchanges, and Paul Grewal argues that decentralized and centralized exchanges aren't the same thing. They're going to need to operate on different rules. So very interesting to see how this case continues to evolve.
I'm glad to see him in the courts so that there's like official responses that are coming. But man, it would be nice to get some clarity, settle something. We got XRP, we've got Coinbase, Binance, all this stuff's just been going on. And even when you think you're going to get, 7 days, they got to answer, and then boom, nope, they're just dragging it out. So it would be nice to just get some clarity in this market. Oh my gosh. Yeah, and by all accounts, this U.S. litigation could take years. So not necessarily any clarity coming anytime soon.
No, not at all.
It's not all bad news. We do have some adoption news out of Frax Finance. They're going to be launching their own layer 2 on Ethereum network. I think this is a roll up, right?
Yeah, it's a roll up. It's building on some of the ecosystem that they're already doing, and they're hoping to use some of the fees that are collected to either burn it or distribute to Frax shares holders who are taking part in the governance system. So it's interesting. Will they get a lot of adoption? Everyone seems to be coming up with roll-ups in their own layer 2s, and I worry whether or not this will get as much adoption as they want. But if you're a big Frax fan, why not? They're talking about this coming out by the end of this year. Another 6 months. It's still not really up and running yet.
Yeah, so they're going to have their own blockchain named Frax Chain, expected to be ready by the end of the year. Governance token, and they're going to use the Frax stablecoin and Frax Ether. Yeah, interesting.
It sounds kind of like a bank, almost like the Frax bank is building their chain for doing Frax business.
Yeah. And then just with all the talk about stablecoin too, this was an algorithmic stablecoin, so maybe it's the last man standing.
Yeah, exactly.
In DeFi. So.
But they're making themselves more and more of a target with Frax shares. Like literally calling your token Frax shares seems like asking for an SEC lawsuit.
Yeah. Do you know where Frax is out of? I have no idea.
No, I don't know.
Yeah, it'd be interesting to look up. In the last story we have today, and it's not necessarily a super positive one, but maybe a sign of opportunity. You can look at it. That's the silver lining. But NFT liquidity dries up, forcing marketplace to battle for users. According to data from Dune Analytics, daily trades have been steadily falling for the past 3 months. March 13, approximately 44,000 NFT trades took place. However, on June 12th, that number was closer to 25,000. So
almost
maybe
a 50% drop. That's pretty crazy. Yeah, less NFT traders out there.
The other quote was NFT sales might have fallen below $1 billion for the first time this year. Yeah, but go ahead.
Yeah, are we kind of seeing some of the results of the meme coin craze driving a lot of NFT traders to meme coins? Are we also feeling some of the kind of pressure from declining ETH? ETH has been slowly bleeding for the last while now. And maybe we're seeing some of the impacts of that decision as well.
And also you have Bulls taking off. So maybe a lot of the players in the NFT market are turning their eyes towards Bitcoin type NFTs.
Yeah.
Ordinal.
Yeah, exactly. We're seeing lots of interest in ordinals. If you look, March, we had a little bit of a bump when ETH kind of hit 2,100, but ETH's been down since April 15th, and so it's just been slowly declining. So the decline in NFT trading volume, I wonder if we're also seeing a downtrend in total listings as well. Maybe less NFTs up for sale as people wait for the ETH price to recover against USD.
Marketplace has been trying to get people to list. Blur, an NFT marketplace, has emphasized rewarding bidders who take real risks with the highest number of bidding points. And Looks Rare, another NFT marketplace, looking to reclaim its former glory by announcing its own rewards, quote unquote, season, where you can earn gems to be a part of the Looks airdrop, which is looks like a token for Looks Rare. And Kraken, undeterred, they launched their NFT marketplace, as we reported last week. But yeah, it'll be interesting to see what happens to the NFT marketplace as we come out of this bear market. It looks like Bitcoin's going to be okay, but what's going to happen with the rest of DeFi and NFTs? What's that going to look like next year?
Yeah, it'll be really interesting. I imagine as we maybe see ETH rise and grow again, we might see NFTs come back, where as the craze on ordinals slowly dissipate, just like we saw on meme coins. That
Yeah,
interest in
if that's just a season, and then the real strength is really in the smart contracts and the Ethereum type
yeah.
blockchains for NFTs. Amazing times we're living through. Exciting to watch it. Thanks, everybody. That's our show for today. Thanks for listening to Decentralized News. So please consider subscribing to catch the videos as soon as they drop. Our goal is to provide unfiltered content that help foster genuine discussions to help the entire space grow. Please remember, this is not financial advice, and we are not financial advisors. This show was presented for educational and entertainment purposes only. Please do your own research before making any investment decisions, and thank you very much for your support. And stay tuned for the next episode. We'll see you then.